Thank you very much. Hi, everyone. Thanks for coming to this, well, partly gloomy, but with some bright rays of light as well, outlook of the economy that we are presenting today. So the Baltic economies, we are in the midst of a very uncertain time, and up to now, so far, the Latvian economy has been rather resilient, but we can only call it, at best, stagnation, and we're not really seeing growth at the moment. So what's going to happen in the future? That's what I'm going to be talking about in my presentation. But I will start with, oh yeah, here we go. I will start with the sentiment of all of you, of the economic actors in the Baltic economies. And we can see that ever since February 2022, so ever since the Russian invasion of Ukraine last year, the sentiment has been rather downbeat and it has not recovered. The most pronounced kind of negativity is seen in Estonia, but also Lithuania and Latvia. We are in a rather downbeat mood throughout the economy. It's both businesses that are kind of included in this indicator, and also consumers. And if we look at in a historical perspective, then of course it was the COVID crisis which saw similar negativity. But apart from that, you have to go very far back, and it's the global financial crisis where we have seen similar type of negative sentiment. So if you look at what's happening right now, and what we have seen recently is, of course, the very high inflation environment. And in some ways, for companies, it has actually been a good thing. Lauris already talked about how the profits have been pretty strong for this economy, for the separate sectors and for a lot of companies. And if we look at what has been driving the price growth in the Baltic economies in the recent times, then you can, from the economics perspective, you can divide the drivers of price growth into the share of profits of companies and the share of compensation of employees. And if you look at that, then you can see that this yellow part, which is the share of profits, has been the key driver of the price level growth in the Baltic economies, both so in all of the Baltic economies in 2021 and 2022. The bad news is that this time of high profits is very likely over now. If we look at the start of this year, the first 2 quarters of this year, the yellow part is, well, in the Latvian case, already negative. In the rest of the Baltics, it has really shrunk. So what that means is that we're kind of turning back to normality. The overall price growth is again being driven more by the wage rises rather than by what the companies can lift in terms of can achieve in terms of their profits. So this is partly because what we are seeing going forward is falling inflation. And if at times of high inflation companies were able to kind of raise their prices maybe on top of what the increase in costs would require, then in times of falling inflation, it's not going to be the case anymore. And if we think about inflation, then of course it has been declining for some time now, ever since Q3 of last year. And as my colleagues showed, then it's the global forces that are at work here. Global prices have declined a lot, and this has helped the inflation to come down. And in the Baltic states, we saw inflation higher than 20%, almost 25%. In Q3 of last year. Right now, we're seeing inflation of around 6%, even below 5%. So this has changed, the story has changed a lot. But if we want to see what's happening inside the economies and what the driving force for price increases is inside the economies, then we have to look at core inflation. And core inflation kind of strips out the volatile components in the headline inflation. So core inflation has to do with prices of services, with prices of manufactured goods, etc. And core inflation is actually still rather strong. And the decline that we have seen in headline inflation is definitely not as pronounced in core inflation. So what we're seeing for the future is that these deflationary forces that come from global prices will be at work in the Baltic states as well. But the part that has to do with wages, that has to do with services prices, will still be very strong, because wage growth in the Baltics is likely to remain very strong going forward as well. And therefore, in our current forecast, we're not seeing deflation for the coming 2 years. It's still going to be small, but still inflation. So deflationary story can only appear if we see a much more marked slowdown in GDP, if we see a much more pronounced recession in the external side, and if we see a much more pronounced declines in GDP in the Baltic states, then we might also see some deflation in the Baltics. But if not, then it's mostly a story of a much lower inflation that we saw previously. But having said that, it is important to remember that low inflation is not the same as, lower prices. And if we look at the costs and the prices in terms of levels right now, then we must say that there has been hardly any decline from the peaks. If you look at consumer prices, for example, so this is the classical thing to look at, then the consumer price index is still at a very high level, and maybe there is some kind of downward slope at the end of this time period, at the recent months, but in general, the prices on the consumer side are still almost 35–40% higher than in 2019. If you look at construction costs, they're also 35% above what was the case in 2019. So the cost of living has gone up, and it is not likely to be going down notably going forward. The only exception is producer prices, where we do see some backtracking of the high price level, and we do expect that some of this will feed also into the consumer prices, and we will see some alleviation of this very high price level. But in general, prices are very likely to remain at a rather high level. And what is maybe even more important is the separate kind of price stories that we have for different sets of goods or services. And if you look at the food prices, then for quite a long time we have been in the Baltics, we have been converging to the EU average level of food prices. And the convergence has suddenly in 2022 been complete for Lithuania, and that we have actually jumped higher than the EU average for Latvia and Estonia in terms of food prices. So our the welfare of our consumers, the household wealth that we have is still around 25% lower than EU average in Latvia, for example, yeah? The GDP per capita. But food prices are already 5% above what is the average in EU. And that is a problem, because food prices make up a larger component, a larger share of our consumption basket, and that definitely means that our consumers are hurting more. If we look at a more global perspective, then goods in the Baltic states are still 5 to 10% overall less expensive than EU average. And services, the gap between us and EU average is even larger, 20 to 40%. But we are catching up pretty fast in terms of the price level. And of course, the high price level it hurts consumption. And what we have seen in Lithuania and Estonia is for some time now, falling retail trade. In Latvia, maybe more recent fall in retail trade has been observed. But in general, we are seeing the signs that consumption is starting to slow down. Maybe a bit better news is on the side of services, because on the side of services, for example, Swedbank card payments in restaurants, you can see that the activity was still recovering in 2022. The growth was very, very strong. Right now, the real spending, so this is we remove the effect of inflation. Real spending is still rising in Lithuania and Latvia. It is kind of on the same level as last year in Estonia, but in general, the services side is maybe feeling a bit more comfortable still in terms of consumption. Another topic when we think about consumption is, of course, the impact of rising interest rates. And my colleagues already talked about it, for example, in the case of Sweden. And in Latvia, it has also been a very topical issue. Even the government has been discussing this as a potential kind of a key focus area for them in the future. But I must say that it is less of a problem in Latvia than maybe elsewhere. And why so? Well, first of all, the share of households that actually have a mortgage in Latvia is much lower than what you see in Lithuania and Estonia, and especially what you see in Sweden, which is right here, so above 50%. So it's already a much larger share of households that are impacted. It's around so it's a bit above 100,000 households that have a mortgage. The average mortgage, according to the Bank of Latvia data, is around 85,000 euros. And if you look at a household finance and consumption survey, which is a macro level indicator, then the average monthly income for households with a mortgage is around 2,700 euros, and that was back in 2020. So right now, this figure is even larger. So basically, here we're not talking about an average kind of household. We're talking about someone who is a bit richer than the average. And as a result of this high increase in interest rates, which is certainly straight away impacting all of these mortgage takers, because in Latvia, the share of those who are having a variable rate mortgage is above 90%. And the impact of that, however, is rather muted. We have calculated that the monthly payment for more than 70% of households is up by even less than 100 euros. So the payment is up by more than 250 euros for around 6% of these mortgage takers. So it's a small share of the households that are impacted in a material way. If we look at households who are late with mortgage payments or who have some problems, it's only 0.5%. And the expectation is that it's not going to be increasing by much. And overall portfolio DSTI, so the debt service to income ratio, is still below 25%. So we're not currently seeing much of a problem in terms of exactly these mortgage takers. I think the average price level that is in the economy, that is more of a problem for consumption than what we are seeing here. Going forward, the good news is that purchasing power is returning. And it is returning. It is maybe returning a bit slower than we would hope for, but it is returning. And what we have seen already since the mid of this year is that real wages are growing have started to grow. So wages are growing faster than inflation already. And this has helped consumer confidence to recover. And if businesses are still feeling very downbeat, then consumer confidence has really picked up, especially, for example, in Latvia and Lithuania. In Estonia, consumer confidence is still at very low levels, only comparable to what we saw during the global financial crisis. Another story which links to the consumption side and to how the consumer is feeling is definitely the labor markets. And labor markets have been resilient. They have been resilient in the US, in Sweden, they have been resilient in the Baltics as well. There is some pickup recently in unemployment rates in Estonia, which has suffered a recession for 6 quarters already, so it's maybe no wonder that we are seeing a pickup in unemployment there. But when it comes to Latvia, unemployment is quite low and stable. When it comes to Lithuania, it's maybe a bit volatile, but rather low still. And if we think about the future in terms of the wage story, then already right now we're seeing that wages are still growing by around 10%. And going forward, this is likely to still remain, the wage growth is likely to still remain very high. And maybe for businesses, uncomfortably high. On the side of consumers, of course, it's a good news because their purchasing power will start going back up. And when you think about businesses, then, of course, the question is what is holding businesses back? What are the key problems? And one thing is, of course, this labor shortage, which goes along with the high increase in wages. But labor shortage in Lithuania and Estonia, for sure, has kind of pared back, has gone down in the recent year. In Latvia, this decline is much less pronounced, but still the levels are very similar to what we saw pre-COVID, when we were very worried about labor shortage. So labor shortage may be less of an issue than a year ago, but still very much an issue for companies. But what is much more of an issue right now is demand. And demand shortage in the private sector, especially in Estonia and Lithuania, has been flagged as the key issue for the private sector companies. And this is in line with what we are seeing in the slowing demand, in the slowing consumption. This is in line what we're seeing in terms of falling exports of all of 3 of the Baltic states. Because this lack of demand globally is most evident on the export side in our economies. One indicator is manufacturing, which is an industry that is very connected to export markets, and in manufacturing we see declines for some time now, and industry confidence is weak, export orders are actually declining, manufacturing is shrinking, and this projected growth in export markets is very, very slow. If you look at you heard that US growth is very strong now, but it's going down. Germany is already weak. Sweden is very weak and is likely to remain so in the coming couple of years. Therefore, in terms of export market potential, I mean, it is very limited, especially given the fact that our wages are expected to continue growing rather fast. So this competitiveness problem will still arise. A bright spot is public investment. If you look at construction volumes in Latvia and Lithuania, that they have suddenly shot up at the start of this year, and it is most likely linked to EU funds coming in the economies. In Estonia, for example, the story is still very negative. But if you look at on the private side, for example, in the private residential construction, then there we see a more depressed environment. And if you look at residential building permits, for example, they have been coming down from the very high peaks, for example, for Lithuania, that were reached in 2021. There has been a bit of a decline in Latvia as well, but it's more moderate, and the residential building permits are maybe a bit down, but not this fall is not as pronounced as we see in Lithuania and Estonia. But in general, the private sector construction, the private sector investment side is of course limited by the fact that interest rates are high. And if we think about the construction sector, Nerijus already talked a bit about prices. Housing affordability in general has gone down by a lot because prices are very high still. and even increasing in terms of some sectors of apartments, but the increase in the interest rate means that housing affordability is going down, and it has been going down quite steeply. And if you, the 100 mark is the mark of affordability or not affordability, and if you look at Vilnius or Tallinn, then apartments in these capitals are already, well, at the limit and are very near being unaffordable. In Riga, the average apartment is still affordable, but if we talk about newer housing, if we talk about something that was built or renovated post-2000s, then it is also already unaffordable for an average household. And of course, that has resulted in a fall in transactions, most steeper in Estonia and Lithuania, maybe not as pronounced in Latvia, but still a declining activity in the sector. So overall, if we look at the future of the Baltic economies, right now Latvia is, and also Lithuania is seeing a rather stagnant development. Estonia, as I said, has been experiencing 6 quarters of negative GDP, so a recession for sure. This stagnation will continue for some time now, but we see an improvement starting from when we see an improvement in the export side, which is likely to happen only once we see the interest rates decline. And since this is expected to happen towards the second quarter of next year, then a more pronounced recovery in the Baltics as well is likely to happen only starting the mid next year. Overall, this recovery is not a very impressive one. I mean, we are projecting that GDP growth, for example, in Latvia will be around 2% only next year. So it's not a steep recovery, because we will still see that economic weakness because of these high interest rates will still persist in our trade partners. So the story for Baltics is not very bright, but there are worse cases in the world, I think. Yeah. Thank you.